Hi, I'm Sue Cox, and in this video I'm going to share with you a great technique for the income tax calculation in the AF1 exam. The income tax calculation in the AF1 exam can be quite daunting, and I'll show you a template to use in the exam. This template will provide you with a warning system, which means you'll be able to spot the different types of client scenarios and take action accordingly. And of course, you will then know which allowances to apply and what tax rates to use, depending on the scenario. In the AF1 exam, it's essential that you show all your workings to any calculation that you may be asked to do. And remember, you get marks for each stage of a calculation, not just for the answer. By using and writing out this template, you're showing the examiner that you are fully aware that income tax is calculated in a priority order. I like to think it's good to grid. We calculate the non-savings income first, then savings, and lastly, dividends. The last column you can see is the total column, and this is very important, as you'll see in a moment. Let me talk you through each column. As the name suggests, on the first column, all income that is not savings will go into this column. The obvious one, of course, is income which comes from being employed or self-employed. Also, if a client receives any benefits in kind from their employer, for instance, a company car or private medical insurance, then it's the taxable amount of this benefit that will go into the first column. And lastly, if the client is retired and receiving any pension income or has any investment property and receives rental income, both of these also go into the first column. Now, all you need to do is total up the non-savings income. The next column is savings. We need to take care when calculating the amounts to put in this column. Within the case study, they will tell you how much the clients have in their bank or building society account, and they'll even tell you the interest rate that they receive. As you know, bank and building society interest is paid gross, and this will be very easy to calculate. However, they may also tell you in the case study that the client receives interest from their investments. This is when we need to be careful. There are some investments which pay interest net of basic rate tax. For instance, the Real Estate Investment Trust. This provides two types of income: property income and non-property income. For this exam, you need to remember that it's the property income that's interest. And if it's interest, it's paid net of 20%. This means that you'll need to gross up the property income and put the gross figure in the savings column. The same will apply to purchase life annuities and corporate bonds, as both of these pay interest net of basic rate too. And the last thing you need to do is to add up all the savings income together to get a total. The next column is for dividends, and the good news is that regardless of where the dividends have come from, they always pay gross. Now, I mentioned earlier about the Real Estate Investment Trust. If the client receives non-property income distributions from this, then these are dividends and would need to be placed in this column. In the AF1 exam, you'll have quite a lot of detail in the case study. You should expect to have income in all three columns. And this template should help you by ensuring that you put the income into the correct columns. The last column totals all the client's income from all sources and shows you their total gross income. Now this figure is really important because the next stage is to go back to the first column and deduct the personal allowance. However, not everybody will be entitled to that full personal allowance. And that's why I mentioned earlier that the template has a built-in warning system. If the total gross income is in excess of £100,000, then the personal allowance will be reduced. For every £2 above £100,000, then £1 is deducted from the personal allowance. And this does mean that depending on the income, an individual could end up with no personal allowance at all. If the individual's income is under £100,000, then the full personal allowance will be available. The personal allowance is taken off income in the same priority order. First, it will be deducted from the total non-savings. If there is still unused personal allowance, then this could be offset against the total savings income. And lastly, against the total dividend income. The last row of our template shows the total taxable income. And as you can see, I have two more warning signs for you. The first one is for the total taxable non-savings column. And the information about this is detailed on the very first line of your tax tables. If the total taxable non-savings income is less than £5,000, it means that the client would still be able to apply the starting rate of £5,000 to the savings income. However, if the total taxable non-savings income is more than the £5,000, then the starting rate would not apply to any of the savings income. And the last warning sign on the slide is for the total taxable income from all sources. This will tell you if your client is a basic, higher, or additional rate taxpayer. The template is now complete, and you now need to just calculate the income tax liability. Remember, you get marks for showing your calculations, and that's why it's a good idea to use headings to show the examiner all your workings. And don't forget, you already know what type of taxpayer your client is from the template. This means you already know if they will have a £1,000 personal savings allowance or £500. And the good news is that you'll have the opportunity of seeing this template in action in the income tax example video. And be warned, this is quite a challenging mini case study. Thank you for listening, and I really hope that this helps you with the layout of your income tax calculation in the exam.